Hey everyone, in this video I want to talk about a strategy, an investment strategy that could potentially unlock very high gains. And this one has been on my mind since quite a while, but I just want to use this as a theoretical example, which means I also haven't applied it myself. But I want to show what we could potentially do here to make use of the current situation, which is that risk assets have largely sold off, right? And so I want to identify opportunities here that match this environment. So this can be applied to not only Chinese stocks, but as this channel is about Chinese stocks, I will use China as an example. So what I'm going to do here is I go to finviz.com and I use the screener in order to identify stocks that fit a certain pattern. And this one is, first of all, I use China as a country, but I would reckon that there are similar stocks to be found in US names, but also in other geographies. But anyways, again, this is about China. And then what I'm looking for here on the fundamental side is identifying stocks that have a price to cash ratio of under 1, which means if we look at the description that it is calculated by dividing the current closing price of the stock by the latest quarter's cash per share. So all of the companies that are appearing now in this list, they have a quite good cash position, meaning there's less risk that these companies are actually going out of business or facing bankruptcy fears immediately. And so what is it given here is as a list of, well, these are now 4 pages of a couple of tickers that will match this criteria. So they are Chinese and have a very good cash position. And so what we could do here theoretically is to make a basket of all of these companies into one portfolio and say invest $1,000 or $10,000, whatever you want to put into this basket in this strategy, and then bet on the fact that these companies will recover. Because frankly, if you're looking at some of the performances, so these are just a couple of the names listed in here, they are mostly down by, let's say, 90% to 98%, so completely washed out. Of course, if you are using the January 2021 highs, it depends a little bit. If you go on a further out trajectory here, well, some of these names still look similar to that. And so, yeah, these are stocks that have been performing very badly. And one could say the fact that they are down by so much also somewhat limits the further downward potential. On the other hand, one could argue that this, first of all, does not necessarily mean that these stocks will recover. And second of all, they can always fall more down, right? So one other thing that we could do here is that we could actually add another metric here, which will be the net profit margin, and that one should be positive, higher than 0%. And that's giving us an updated list of names that are, for one, in a good cash position, and second, even profitable, meaning with each quarter, they're just increasing their cash position. And so some of these names, I know, are actually quite big companies. Some of them even have billions in market cap and also some quite good trading volume. But the idea here is that you don't really need to do due diligence in all of these names, meaning you don't need to know this company by heart, what they do, what exactly is the problem that the stock has sold off so much, and not what is the actual business case and potential in the future. For example, I'm covering Xinlei on the channel sometimes at the ticker XNet, and this company also makes it into that list because they're profitable and they have a nice cash position. But the idea here is if you just diversify into, let's say, 20 of the names that are given in that list, and now with the metrics, both good cash and also profitable, it's only down to 20 names. So if you would spread out the investment into, let's say, $10,000 into 20 of these names, that by itself also minimizes the risk that in case one of these companies turns out to be a fraud or turns out to be that it's going bankrupt anyways or will be bought out, then this company will be taken out of the portfolio, go to zero, but the rest of the companies will still keep this potential of making maybe up to 10x, given that these companies could technically, in a better macro environment, go back to their original share prices, right? And so this strategy is kind of minimizing a little bit of risk, and on a long-term trajectory, not on a short term, I would argue, but let's think 5, 10, 15 years down the road, they could unlock really high gains. But on the other hand, of course, be aware that this is not given. This could also just stay as low as they are, especially if it's, let's say, only China. You could also build a similar portfolio and also include a couple of different geographies. I'm sure you will also find similar companies in the US and so on. But I just want to share with you this kind of idea here and give you the tools at hand to kind of, come up with your own idea and strategy here. I'm personally thinking of doing such kind of a basket in one of a portfolio here and, spend then just, let's say, maybe 0.5 or 1% of my overall investment in such kind of a strategy there. If that were to make 10x over time, that will be a very nice return, even at a low absolute investment. But given the fact that these names are so washed out, and at the same time, one would argue in a market you would actually invest in companies that are financially doing well, that begs the question whether or not this is just overlooked because of the macroeconomic factors, the risk of environment and so on, and possibly will recover at some point in time. So what do you think about this strategy? Do you think this is feasible or not? Let me know down in the comments. Thanks for watching. See you in my next videos.